Hey friends, welcome to FX Yogi. In today's video, let's learn how to use pivot points for range trading. The simplest way to use pivot point levels in your forex trading is to use them just like your regular support and resistance levels. Just like good old support and resistance, the price will test the levels repeatedly. The more times a currency pair touches a pivot level, then reverses, the stronger the level is. Actually, pivoting simply means reaching a support or resistance level and then reversing. If you see that the pivot level is holding, this could give you some good trading opportunities. If the price is nearing the upper resistance level, you could sell the pair and place a stop just above the resistance. If the price is nearing a support level, you could buy and put your stop just below the level. Let's take a look at an example so you can visualize this. Here's a 15-minute chart of GBPUSD. In the chart above, you see that price is testing the S1 support level. If you think it will hold, what you can do is buy at market and then put a stop loss order past the next support level. If you are conservative, you can send a wide stop just below $2. If the price reaches past $2, chances are it won't be coming back up, as both S1 and S2 could become resistance levels. If you are a little more aggressive and confident that support at $1 could hold, you can set your stop just below $1. As for your take profit points, you could target PP or R1, which could also provide some sort of resistance. Let's see what happened if you bought at the market. It looks like S1 held a support. What's more, if you have targeted PP as your take profit point, you could have hit your PT. Of course, it ain't always that simple. You should not rely only on the pivot point levels. You should note whether pivot point levels line up with former support and resistance levels. You can also incorporate candlestick analysis and other type of indicators to help you with more information. For example, if you see that a doji has formed over $1 or that a stochastic is indicating oversold conditions, then the odds are higher that $1 will hold as support. Also, most of the time, trading normally takes place between the first support and resistance levels. Occasionally, the price will test the second levels, and every once in a while, the third levels will be tested. That's all for today. Let's catch up in the next video with more interesting content. Until then, take care. Bye-bye.